Let's create a budget. Let's get out of debt. Let's build wealth. Welcome back to the channel, guys. So we're breaking down this flow chart. In the last couple of videos we went over the income, bubble, and the checking account. So in this video we're going to go over the lines of credit. So the lines of credit, there's a lot of different lines of credit that you can use. By going through the lines of credit, the ultimate goal is to get your line of credit from your own bank. So we practice the infinite banking concept, velocity banking, and ultimate goal is to get that line of credit from your bank. Now, some people aren't able to get a line of credit, so this will kind of be, in my opinion, the orders of line of credit in which to obtain. Okay, so assuming that you can get no line of credit, you try to apply, you've been denied, and you want to start velocity banking, you want to do this flow, and you're in the lines of credit bubble. So I believe the first option, and this option depends on if you want to be conservative, if you want to kind of be safe, then you could start your own line of credit. Basically create your own line of credit by using your savings account as your line of credit. You will build it up to a certain amount and then use that just like a line of credit. I know there's been some controversy over it, but I believe that if you want to be conservative and you want to build up your own line of credit, it is possible. So this may, in a way, this is using creative imagination. Creative imagination is basically you're looking at it like a line of credit and you use it like a line of credit. And then you have to keep your mind thinking that all this is a line of credit, and it pretty much works the same way as a line of credit, except the leverage is basically your time of saving. So in order to use this, it's like acquiring a line of credit, but it takes you however long it takes for you to save that amount that you want that line of credit to be. So you're sacrificing some time here, but it will work like a regular line of credit. Next, your line of credit will be a secured credit card. So secured credit card it's kind of like number one, you have to already have some capital. So if you have, you're trying to apply for credit cards and you've been getting denied and can't get one, you could take, let's say you have $2,500 in your savings or checking account, you can send that to credit card company and then they'll send you a credit card. So basically whatever the amount that you send them, that's what your credit line would be. I would suggest using Discover card first. If they approve you, then you can get a secured credit card through Discover. If not, then you can use any of the Visa or MasterCard companies. The Discover sometimes will actually give you rewards with a secure card. That's pretty much the only one I've ever seen do that. Other credit card, Visa, MasterCard, then it's basically just a credit card. So the good thing about this is usually after a year, 12 months or so, let's say you send that $2,500 in, you'll have a $2,500 credit card. It works just like a regular one. No one will even know it's secured. But after the designated time that the credit card company set, they'll send you that $2,500 back, and that means you can use that capital somewhere else, and then that secure credit card basically just becomes a regular credit card. Next, you would want a personal line of credit. You should always choose a line of credit over a credit card if you can get approved for it. So velocity banking with a credit card, you're basically paying all of your bills with that credit card, and then you're paying the credit card off every month. So if you're doing velocity banking, you can't use a credit card for things like car payment and mortgage or rent. So but with a personal line of credit, you can dump. So like with the secure line of credit, you can't dump your entire income into the credit card because you still need cash to pay for those other things. with a personal line of credit, you can dump 100% of your income into that line of credit without worry as far as mortgage payments, car payments, or anything else that you need cash for. So personal line of credit is basically it's an account where you can withdraw from, and then you pay back into it, and then you can withdraw from it again. It's a revolving line of credit to where you can constantly, as long as you have available credit in that line of credit account, you'll be able to withdraw from it and put back in. It's kind of like a checking account, in and out whenever you want, unlimited with no fees or anything like that. Next, you would, if you have a house, you will move on to a HELOC or home equity line of credit. So a home equity line of credit, there are different types of home equity lines of credit, but it will work very similar to a personal line of credit. Usually with a HELOC, you'll have a lot higher limit than a personal line of credit, and usually almost is always a lower interest rate on this type of line of credit. So the home, and if you look at this, if you're young, or if you're just, you don't have a lot of credit and you're working on building your credit, this is a good path to follow, and making sure that you're utilizing these accounts the right way. You're paying them off every month. If it's a credit card, then you just follow through and you make sure that you keep those payments made, that you keep your credit looking good as possible, and you're never missing payments. And then you're naturally involved from that credit card, and then once the bank sees pattern and sees that you're able to handle that, they give you a regular credit card. The regular credit card, you utilize that, you make your payments on it, you pay it off every month, and once they see that you can do that, then apply for the line of credit. Once you get the line of credit, you'll be able to, if you have debt, you'll be able to eliminate all the debt. If not, you can invest with that. You do investing, and then eventually you'll be able to get approved to be able to buy your first house. And then once you get that house paid down enough, you can acquire the home equity line of credit. And the ultimate goal here is your own bank, the infinite banking concept. So obviously here, when you go to get a personal line of credit or you go to get a home equity line of credit, you're looking at different banks, different credit unions. Basically, all of these banks they're competing to get your business. So if you have your own bank, then why even fool with these other lines of credit? You should just use the infinite banking concept and use your whole dividend paying life insurance policy as your line of credit. So in the beginning, it wouldn't make much sense to use it if it's not high enough. I mean, if you look at the first choice for line of credit and the last choice for line of credit, those can go hand in hand. I mean, if you wanted to, you can open your bank in the beginning and basically build it up, and once it gets to whatever amount, the good thing about this is a line of credit that you can set it at whatever you want. So if you want to set that line of credit at $2,500, you basically will have a $2,500 line of credit. You practice the velocity banking, and once you have some debt paid off, or once you're ready, you can increase that to say $5,000, and now you have a $5,000 line of credit. You'll utilize it, and then eventually you can increase that to even $10,000, $20,000, $30,000, even $50,000 and on up. You can set it at whatever you want. Now, in this channel, I've always from the beginning said you need to have your checking account at a set amount. By having your checking account at that set amount, you'll have the ability to, because with the infinite banking concept, it's not as quick as a personal line of credit, home equity line of credit. It's not like you just transfer from checking to savings or checking to line of credit. There is a turnaround. Is usually, I would say, at the very least, just to be super conservative, give yourself a week but usually it only takes a few days. If you have it set up where you could transfer to your account and transfer back into your bank, the turnaround time could be as little as 3 days. But by having your checking account at that set amount, which is basically 1 month of expense, you can do this you could give yourself the luxury of that week to basically all you're doing is replenishing that account. So, ultimate goal, once you have the credit cards are paid off, you acquired a line of credit, you have that line of credit, you either outgrow that line of credit or your bank is big enough at this point. Why borrow from a line of credit and borrow from your bank when you could just borrow from your bank and use it as a line of credit? So guys, the ultimate goal, lines of credit, is to, if you're going to be competing, why even compete? Why give your business to someone else when you can just keep it in your own family? So eventually, at some point, your bank will become your line of credit. Utilize the other lines of credit to get to a point to where you're able to use your own bank as your line of credit. So guys, if you have questions, leave comments below on lines of credit. The savings account question comes up quite a bit. If you have the capital, if you have any questions over line of credit and how to utilize them, or whether, if you're just getting started, where to start at, just leave comments below and we can discuss it. So guys, if you found value in this video, I would appreciate a thumbs up, and don't forget to subscribe if you haven't, and clicking the notification bell will alert you anytime there's a new video out. I do post a video every 3 days, but by hitting that notification bell, it will give you a little signal to let you know that a new video has came out. So again guys, thank you for watching, and I'll see you in the next video.